Hey Joel, this is Ryan with TrendLizard.com. Thanks for being a TrendLizard subscriber. I want to take a look at PRCP or Perceptron for you tonight per your email. We're going to look at it on a bunch of different time frames, just so we can get a full perspective of what's going on there. And let me explain to you how I kind of do this. What I do is I start in a very long-term time frame and try to find the most bullish possibility available, and then try to prove it or disprove it from there. So that's what we're going to do. So let's start with the very long-term time frame on PRCP. This is it. It was incepted in 1992. It had a big downtrend from 1997 down to 2001, where it nearly became a penny stock. From there, it recovered in 2001 up to the 2007 high, at which point it pulled back and then resumed its up move here before stalling at the 2014 high and pulling back from there. So I labeled this in a way that is the most bullish possible outcome in my mind, and then I wanted to see if I could prove or disprove this possibility. Unfortunately, I think I can disprove this possibility. Normally, when the market is in a trend, it won't retrace more than 61.8% of any trendy up move, and it's actually done that twice. So if I add our Fibonacci retracement areas, it shows that these pullbacks have retraced significantly more than we would expect, not once but twice. This is not a bullish thing. It makes me think that this is not the start of a new bull move. Instead, it actually looks more like a big counter trend move, and that looks bearish for the future. And the way I came to that conclusion is I changed the scale of this chart. Right now it's a log scale. I actually changed it to a linear scale to see what that would do to the look of this price pattern, and I'll show you what it did. We went to a linear scale here, and you can see what that did. It actually changed the nature of the chart quite a bit. It made the entire advance off the 2001 low into the 2014 high look like one big counter trend move. Normally, I don't mess with the scale of a chart just to come to some conclusion, but after seeing how deep these pullbacks were, it made me wanted to dig a little bit deeper and see what was really going on there. So after doing that, it suggests to me that this is not a bullish move off the 2001 low, and that instead this is actually one big counter trend recovery, thereby making the entire chart look pretty bearish. So if we go back to a log scale chart, this is the same labeling shown here, just on a log scale. It suggests again that the entire advance off the 2001 low to the 2014 high is one big counter trend move. Prices turned down in 2014. There is no good reason to think that this pullback is going to end anytime soon. The most bullish scenario that I could envision here is PRCP finding a low near 250 and turning higher from there. But even that, there's no real good reason to think that's going to happen. As long as PRCP is trading below 10, it's going to look like it's heading lower. And of course, it takes a really big move just to get up to 10. So to me, this just does not look like a good buying opportunity. It looks bearish. It's going to continue to look bearish as long as it's trading under 10. So my recommendation would be to stay away from this stock if you have that option. So I hope that's helpful. If you have any other questions, let me know. Send me an email, and I can follow up via email. Otherwise, I look forward to more communications with you in the future. Thanks. Have a great night.